Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, May 9th, 2011. This morning I'm talking about a Chinese fire drill. And the reason I'm saying that is because China's here in the U.S. Brought some finance ministers, policymakers, things of that nature, and they're having this big economic meeting here in the U.S. Between U.S. and China. And basically it's going to come back to the same old story, is that the U.S. is going to press China to allow their currency to float, and China's going to say that their price of the yuan is where it should be, and that they're not going to move, and so the dance continues. So it's sort of a fire drill because it's really nothing is expected to change here, and this is a big story that gets lost in the shuffle. I mean, we talk about what the Fed policy is here in the U.S., how we've had this declining dollar, although dollar rebounded a little bit last week based on some of the sell-offs we were seeing, and some of the risk aversion and flight to safety trade. But by and large, one of the major reasons why Fed policy is where it is because of China, which is basically a vacuum, all right? And they are able to amass these ridiculous trade and currency reserves because of this peg that they have to the U.S. dollar. And their argument is, well, you're weakening the dollar, so that weakens the yuan, so you're the manipulators, not us. But at the end of the day, all right, China keeps sucking up all this excess liquidity in the markets, all right, and then goes out and spends it on things like commodities and things of that nature to help their country grow, which is important. Obviously, they want to grow as well. They've are still way behind the U.S. as far as where they are in terms of economic advancement. All right, but it's gotten to a point where this is out of hand, and this is creating a lot of global instability and inequality, really, as far as where the money is. So it's one of these things that they're going to have to take a look at. China's going to need to do something about this soon. Otherwise, we're going to get in these situations, and it's going to continue. Situation normal, all fouled up. That's a snafu for those of you familiar with military parlance. But basically, what we're looking at here is I'm just looking at the action. You can see right here, euro slid versus dollar last week. All right, a lot of that was based on there was a rumor being floated around that perhaps Greece was getting ready to leave the EU. The terms that they're trying to restructure and refinance their loans on, it's getting to a point where it's very difficult for them to handle. So the EU said they're going to come in and take a look at it. Maybe they're going to do some restructuring there. But last week's ECB announcement, all right, the Trichet still remained committed to potentially raising rates at the next meeting. So, in the face of this debt crisis, we're going to have to see what happens there. But you can see, all right, euro just sold off pretty much, and looks like it's still possibly continuing lower. Now we can look at the Aussie here. All right, you can see the action as well. Aussie sold off in sympathy, but now we're getting a little bit of a bounce back happening as well. Now this morning we have commodities prices are back higher. We've got markets looking higher as well, stocks that is. All right, oil's back to about $100. Gold's back over 1,500, about 1,515. So it looks like there's some bargain hunting going on. People picking up some risk assets on the cheap, perhaps. All right, we can see the pound here. The pound is also lower. All right, same sort of deal as the euro. All right, we're talking about potential weakness in the UK for the economy. Now, later this week, we're going to get the inflation report out of the UK, and that they're hoping that it's going to come in lower because they really need some relief there, and they haven't done it through monetary policy, i.e., raising rates. So we're going to have to see what happens there. But they had home price figures that came in this morning, and they declined a little bit further than expected. Came down 1.4% for last month. They were expecting actually a gain of 0.1% in home prices, and then the 3-month rolling average fell 3.7% versus an expectation of 3%. So that's kind of what we're looking at with the UK. Now they're also going to get their GDP estimate as well a little bit later in this week, and that's going to really tell us where the UK feels they are in terms of growth versus inflation, and how they're going to react with monetary policy. All right, we can see here dollar yen. Show you real quick. Dollar fell versus yen. Yen was strengthening, but yen's weaker today. We've got some risk taking going on. That means people putting on more carry trades, things of that nature. So we've got Japanese yen is also very weak. All right, and then we're looking at the dollar versus the loonie. All right, you can see here it just bumped up against 97 cents last week, but it looks like we might get a potential reversal. A lot of this is due to oil prices. Now on Friday, Canada had a better than expected employment report, so perhaps things are looking up north of the border. All right, but the big news, that I want to keep an eye on this week is what goes on with, the China-U.S. relations here, because, at some point something's going to have to be done here. China can no longer get by on its, we're an emerging market, routine that they've been going with. They are the second largest economy going right now behind the U.S. So, it's really time that they start to play ball fairly, and that means allowing their currency exchange rate to float. Now, they're not going to want to do that because it will strengthen. Okay, it's by and large, people say it's undervalued by about anywhere from 30 to 40%. I think it's undervalued by a lot more than that. But these countries have to start getting their domestic economies in order. Export your way to prosperity. While it's great, somebody at the end of the day has to buy the goods, and if people can't afford them, then they have to take on more debt. And that's pretty much what we do here in the U.S. is that we buy cheap Chinese stuff, all right, and we send out IOUs that increases our federal deficit, things of that nature. Our government just spends the money, and the cycle continues. Well, we need to break that cycle, and one of the major things that needs to happen, is we need economic cooperation from China. So, this is going to be a departure, and I don't think we're going to see anything happen this week, but, it'll be interesting to see if these government folks can get anything done. So, this week's sort of a light week on news. We're going to get some CPI data here in the U.S. at the end of the week, which is going to show us where inflation, real inflation and fake inflation is, meaning what the government actually uses, core versus headline inflation, core X food and energy. Of course, food and energy prices are probably coming down a little bit based on last week's sell-off, but I don't think it's going to show up in this month's number. So, we've got that happening, and we're going to see some Eurozone GDP as well. So, right now, it looks like we may be taking a pause here while the markets sort of decide, all right, which way are we going to go? But we're going to see some of these higher yielding currencies like the Aussie and the Kiwi potentially doing better. So that's what I'm looking at so far this week. We'll see if any major risk themes pop up, but by and large it looks like we're going to trade on just minor fundamentals, but GDP numbers and CPI data can be helpful. So that's what I've got today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.